The Dow touched record highs again today after an impressive read on the labor market. Now, Ben, tomorrow we've got the big labor market, the big jobs data. Do you think that this could be good news for investors jumping in on the heels of this big rally?
Well, I don't know. Again, I don't think it's going to be a bad time for investors to buy stocks by the end of the year. I just have to tell you from my 30 years of experience that I think they're going to get a chance to buy stocks a little bit cheaper than they are today or tomorrow. Yes, the jobs number is the granddaddy of all numbers. Without the employment numbers, the market has little else to hang their hat on. So it's a great indicator. We had a great indication out of ADP suggesting that the numbers should be positive. Whisper numbers are starting to increase, so that probably helps continue the rally that we've been watching.
Now, there have been some concerns about bears that the sequestration effects, though we might not see them until several months later, could eventually impact the jobs and GDP situation. Are the bears in this sense justified at all in being cautious about this rally?
Well, I don't know if it's necessarily a bearish call as much as it's just a wise indication to keep an eye out, because when you have the one of the biggest market players in the world literally leaving the market, meaning the U.S. government, it certainly can have an impact. The question will be, as the rest of the private economy improves, and therefore the jobs numbers that we're going to look at, will that offset the lack of input from the United States government? So it's definitely worth keeping an eye on, but I don't necessarily believe it's a bearish sentiment as it is just a wise way of looking at things.
Now, the next few days will also bring some China data. In light of the property tightening headlines we've been seeing, any nervousness ahead of that?
I always keep an eye on China. I think China is far more important a place to look at than anything else in the world. I think that Greece and Portugal are all throwaways. That without China, the 800-pound gorilla, if you will, in the marketplace, nothing else is going to matter. Now, what you're witnessing, you put it in to a higher view. Yes, the tightening in their real estate markets is impressive, but it's really going after secondary homes and the like. I want to keep more an eye on their productivity, their electricity usage, their iron ore imports, more so than necessarily the lending. This is a new regime that you need to find out how they're going to attempt to move their economy and give them a chance to do it.
And what kind of trends have you been seeing so far in terms of China data?
It's positive. I mean, the best one is a continuing increase, the creep up of the GDP expectation. When that number keeps going up, I mean, it's pretty interesting to me, coming from the United States where we're looking at a 2% GDP and complaining that somebody else is only 7.5%. That's a luxury problem to have, and I think that will continue.
Thanks, Ben. This is Andrea Say reporting for The Street.